The Iraqi dinar against the US dollar, particularly the decline to 139,600 IQD per 100 US dollars, reflects broader developments in Iraq's economic, monetary, and foreign exchange policy, and how it fits into the potential Iraqi dinar revaluation IQDRV narrative. Iraqi dinar exchange rate strengthens, a deep dive into implications, drivers, and the path ahead. The Iraqi dinar, IQD, has shown a continued appreciation trend against the US dollar, USD, with exchange rates improving steadily across Baghdad and the Kurdistan region. As of the latest update, the USD traded at 139,600 IQD in Baghdad's central currency markets and 139,400 IQD in Erbil. This improvement is not just a technical fluctuation. It reflects a significant trend in Iraq's monetary direction, macroeconomic health, and a gradual but strategic shift in currency policy. Understanding what this means requires a look at both short-term developments and long-term structural changes underpinning the IQD's evolution. 1. The current exchange rate movement. What happened? On Saturday, August 2, 2025, Iraq's primary exchange centers in Baghdad, Al-Kifah and Al-Harithiya, and Erbil closed the day with rates showing the Iraqi dinar gaining strength, with the USD dropping from the morning's 139,800 IQD to 139,600 IQD per $100. In local markets, prices remain tight, 140,000 dinars for selling and 139,600 for buying, indicating near parity with interbank wholesale rates. In Erbil, the movement was even more pronounced, where the dinar appreciated further to 139,250 buying, 139,400 selling per $100. These are among the lowest parallel market figures since the February 2023 implementation of US sanctions on illicit dollar smuggling, which had previously pushed the dinar above 150,000 per $100. 2. Why is the dinar strengthening? The top 10 drivers. An economic expert recently outlined 10 key reasons for the USD's decline in Iraq's black market, reflecting broader confidence in the dinar. 1. Dollar supply regulation by the CBI. The Central Bank of Iraq, CBI, is strictly regulating the flow of US dollars into the market via the electronic currency platform, FITR system. Only legitimate importers and those with compliant banking profiles can now access dollars, reducing artificial demand. 2. Adoption of the official exchange rate. The public sector and more businesses are using the official rate of 1,320 IQD per USD for transactions, creating downward pressure on the parallel rate and narrowing the gap. 3. Curbing dollar smuggling to neighboring countries. Crackdowns on informal remittances, especially to countries like Iran, Syria, and Turkey, have sharply curtailed demand for illicit dollars. 4. Foreign currency auction reform. The foreign currency sale window is now tightly controlled, with better anti-money laundering, AML, and Know Your Customer, KYC, protocols reducing speculative activity. 5. Digital transformation and electronic payments. The expansion of electronic payment systems is another strategic pillar. Over 10 million citizens now have e-wallets and debit cards. The CBI's directive mandates POS terminals in all shops and public sectors, forcing more use of dinar digitally rather than cash or dollars. This strengthens demand for IQD in daily life and reduces dollar demand. 6. Iraq's fiscal and budgetary strength in 2025. As of May 2025, Iraq's Ministry of Finance confirmed that it had collected over 46 trillion dinars in revenues, 91% of which came from oil exports. The country continues to run budget surpluses despite infrastructure and security challenges. These surpluses are being used to increase foreign currency reserves, finance the 3-year 2023 to 2025 development budget, which promotes local production and import substitution, supports sovereign guarantees for domestic investors, boosting creditworthiness and job creation. Such economic policies naturally increase the intrinsic value of the dinar and promote Long-term revaluation scenarios. 7. How does this affect the RV outlook? The term RV, or revaluation, refers to an official upward adjustment of the dinars value, either gradually through crawling peg or managed float, or instantly through an official repegging, or switch from a fixed to a basket-based system, as some believe will occur via future IMF or world bank transition or quantum financial system rollout. This current exchange rate trend does not signal an overnight RV, but it is a clear indicator of groundwork being laid. Convergence between official and market rates. Lower demand for parallel market dollars. Iraq's increased use of gold and non-USD foreign assets. IMF and US Treasury involvement in monetary reforms. All of these build the foundation for a future rate change that would be credible, sustainable, and internationally supported, unlike speculative or politically driven rate changes in the past. 8. Regional dynamics and currency impact. Iraq's stronger dinar. Iranian rial suffers as informal dollar flows into Iran shrink. Turkish lira exchange points along the border must adjust to IQD pricing. Gulf-based investors in Iraq's oil and energy sector are increasingly required to hold dinar-denominated accounts. This signals increasing trust and requirement for IQD usage outside Iraq's borders, a precondition for international recognition and potential. IMF Article 8 status, i.e., full currency convertibility. 9. Risks and challenges ahead. Despite progress, challenges remain. Inflationary risks could return if oil prices dip or domestic productivity lags. Political instability, particularly between Baghdad and Erbil. Corruption and money laundering loopholes must continue to be closed, or speculative gaps could re-emerge. The RV cannot happen until these risks are mitigated structurally and through enforcement. The path forward for the Iraqi dinar. Prime Minister's advisor, 62 trillion. Rumors are spreading and our monetary system is subject to strict measures. Prime Minister's advisor, 62 trillion. Rumors are spreading and our monetary system is subject to strict measures. The financial advisor to the Prime Minister, Mirza Mohammed Saleh, confirmed that the rumor of destroying half of the monetary mass, amounting to 62 trillion, is illogical and baseless, while he explained that the Iraqi monetary system is subject to strict procedures in managing paper currency. He called on citizens not to circulate fabricated news and to maintain cohesion and trust in national financial, banking and economic institutions. Saleh said in a statement to the official agency, "Some social media outlets have recently circulated illogical allegations that speak of the destruction of huge sums, estimated at 62 trillion dinars, due to the mouse and the rat, which is news that has no connection to reality and lacks the slightest degree of credibility and economic logic." Saleh emphasized that Iraq's issued monetary mass does not exceed 100 trillion Iraqi dinars, which includes both circulating and reserve currency. Therefore, claiming that more than half of the monetary mass has been destroyed due to environmental or biological factors is economically impossible and implausible given the scale and institutional procedures surrounding monetary management. He also explained that official data indicate that approximately 88% of the total monetary supply is outside the banking system, hoarded by individuals as a result of an inherited monetary culture in Iraqi society, rather than within the warehouses or vaults of a single institution, where it could be subject to such significant damage. He added, the Iraqi monetary system is subject to strict procedures for managing paper currency, including printing, storage, periodic inspection, and exchange, using precise monetary and accounting mechanisms. Such large sums of money cannot be left exposed to damage, without oversight or monitoring. He also pointed out that the rumor aims to create confusion and provoke public opinion, especially among non-experts, who are unaware of the nature of our country's monetary system or how it works. This is something that must be addressed with reason and wisdom. He called on all citizens not to circulate such fabricated news, which represents a disregard for people's intelligence, and has no economic or realistic value. Rather, it constitutes an attempt to confuse public opinion at a time when greater cohesion and trust in national financial, banking, and economic institutions are required. Iraqi dinar continued its upward trend against the US dollar on Saturday, with exchange rates recording a further decline. By the close of business in Baghdad and Erbil, closing figures from Baghdad Central, Al-Kifah and Al-Harithiya, exchanges showed the dollar trading at 139,600 dinars per 100 US dollars. This rate represented a 200 dinar drop from the prices recorded during the morning's trading sessions. In the capital's local exchange shops, the selling price for the dollar remained stable at 140,000 dinars per $100, while the buying price fell to 139,600 dinars, reflecting the lower wholesale rate. Also, check out, expert outlines 10 reasons for notable decline in US dollar exchange rate in Iraq. Meanwhile, currency markets in Erbil, the capital of the Kurdistan region, saw even lower rates. The dollar was selling for 139,400 dinars and buying for 139,250 dinars per 100 US dollars. The continued decrease in the dollar's value reflects a persistent strengthening of the local